Yeah, I'm losing my edge.
Are precious metals expensive? I think this is a good day to talk about this, as the small precious metals index is at all-time highs going back to 2016. That's when we have data for that index going back. And then also gold, a particular commodity that is a part of the precious metals index at the small exchange, making new highs as we speak as well, above 1,800. And, a lot of people like the education and they like learning different stuff. Yesterday, you and I talked about distance and displacement, and that was a fun thing to talk about. Hopefully people learned some stuff, something new. But there's a nice takeaway there at the end as well. And today I want to talk a little bit more kind of like boots on the ground, how to look at trading something. And it's as simple a question as this. Precious metals are at all-time highs. Do you think they're expensive? And that's going to dictate trade, because a lot of feedback that we get is love the education. I wish that I kind of had more of an idea of how to trade futures, or what in your mind. We would never get on here and tell people, oh, you should buy this or sell this, but helping people to get to that point of, okay, how do I come to an idea that is selling this or buying this? And sometimes it's as simple as this, right, Pete? Are precious metals expensive? If you think they're expensive, it's a sale. If you don't, and you think they have more room to run through these highs, that's a buy, right?
Absolutely. You're right. I want a simple expression of opinion. We are seeing very interesting metals markets today. So how can I do that? And, it's funny because I didn't even think of this when we built the smallest precious metals index, or SPRE. We included both gold, silver, and platinum. And we did that for a number of different reasons, to give you an easier expression of precious metals. But particularly, this was actually, I never thought about it. It's custom built for you. I know you're starting to shop for an engagement ring, and probably either gold or platinum based.
Oh my gosh.
This is a nice hedge for you, something you can build on.
I want to move away. You are actually weirdly the second person in my life today that's commented that I'm probably getting married soon, and I want to move away from that as fast as possible. So let's get to slide one of the show here today. Gold is actually, it's been kind of maybe not sneaky for some people, but if you're watching stocks like a hawk and you're not giving enough play to these other asset classes, it's been a hell of a year here for gold. 14 new highs in 2020, today being one of them. Actually, today, I might have crunched these numbers yesterday. Today might be the 15th new high in 2020 here in gold, up 17%, adding another percent onto that today. So up about 18% year to date in the gold market. Pete, this is a good year here for gold bulls, right?
Absolutely. And you know what? I think it sounds, I'm like an old man saying, well, gold is starting to act like gold, but we're starting to get, I remember we spent a lot of last year looking for opportunity around a $6 range, and volatility was tough. The trade-off was you could sell a strangle in there for $2,800. You still had that, you had a large notional exposure and low vol. That was a challenge. Yes, this is really what you want in terms of back and forth and extension here. And don't try to, I think you summed it up wonderfully with this slide, because it kind of changes the argument. It doesn't start with, well, you almost sometimes start with, well, why is it so high? And then you try to engineer back to justifying the fact that it is. Let's take the engineering part of it out, because I can pull up 6 flashcards as to reasons. None of them are really relevant.
Well,
let's talk about the opportunity.
That's one thing that I really try to get away from in my personal trading, which is don't start to, like you say, like reverse engineer a story or try to look for information that's going to get you to that opinion. To me, I like to kind of like, if you have an overwhelming bias, you like this company versus this company, so you want to buy this company, that's a different kind of thing. But when you start to look at, okay, gold up 18% this year, 14 or 15 now new highs, what is the story here? And you start Google, Pete, you could Google, why is gold expensive and why is it cheap? And you'll get multiple stories telling you to buy and sell gold. But today we're trying to get you to a place where you can ask a question like this,
That's
okay,
a
gold
good
is
point, Frankie.
gold's up 18% this year. Is it expensive? And I want to wrap some numbers around it. And yeah, speaking to that notional piece, because we're going to go to the smalls version of this trade here in a second. I mean, Pete, this is a run up from 1,500 now to right now to 1,800, $300 there at $100 per dollar. That's $30,000, I believe, if my math is correct. In notional
that
movement.
Michigan education paying continuous dividends.
I do love that idea that studying math in a college classroom is simple multiplication. They're just asking you to multiply things by, but yeah, Pete, that's $30,000. With the micro, it's 3,000, which is more palatable, but still, a healthy amount. But when you go over to the smalls here, I like this for a couple of reasons. One, it hasn't trended as much. For an active trader in the market, for most people who look at price extremes and look at, is it expensive, is it cheap, stuff like that, a trending market like this that kind of moves higher with some hiccups, but trends mostly higher, is not nearly emitting as much opportunity as something that it's higher, it's 10% higher, but about half as high as gold is on its own, with a lot more back and forth in the middle here. Almost kind of like this chart almost looks relatively unchanged, with a ton of movement, same amount of percentage movement back and forth throughout the year as gold, but just less of a trend. And Pete, a trend from about $59 at the start of the year to about $65 currently. And that's only $600 worth of trending. That's not 3,000. It's not 30,000. Much more palatable. And you can, if you want 3,000 worth of metals exposure, you could walk that thing up for relatively cheap with the cheap exchange rates from the small exchange. But yeah, it is nice to have something. And it's because that silver has been tugging on this gold. It's giving it that more back and forth. It's giving it less of a trend to, if you said, our metal's expensive here and it just continued to move through you, that's not what you want, especially looking at something like this. If you said it was expensive here and it really moved through you, that's not great. And so, yeah, this is the small precious metals version of this, right, Pete? Less notional exposure, less trending because of that holistic nature, giving it this internal push and pull. So yeah, 8 new highs on the year and 10% higher.
And you always want the ability to scale up. Not that you should be in a rush to do it. And this is sometimes the painful learning lesson of trading institutionally sized futures. But you're right. So, and I think people have found this. It's like, well, why don't you just give me the gold? Well, you know what? You can have the gold in a number of different flavors, but we wanted to give you something with more points of back and forth to it. And that's where, trying to pick the right one if you want direction is challenging. Trying to pick the right one in terms of opportunity is challenging. Now, because of the combining these, you can have a difference in that spread and make for an interesting back and forth on this product. So it does, not only does it simplify the process, holistic precious metals exposure. Okay, you got that box checked. What about back and forth? Because of that holistic exposure, it takes out the stock picker's dilemma and gives you a better back and forth tradable product.
Yeah, you're right. That picking dilemma, I mean, think about it. Even in this year, gold much higher than silver this year. On a daily basis, silver today much higher than gold. It's just something that takes you away from the essential thing that people, ask us constantly, which is, what pushes you to a trade? And so if you can get people on board with, these are futures, these are how they're different than stocks, not that much in the smalls different than what you see in the movement in stocks. And then you also have to say, okay, now you have to pick between 3 of these metals after getting over all these hurdles. It's too much. But then also, so now getting more to that applicable trade, are precious metals expensive? Historically, they would say that they are expensive, given that a new high hit today, and historically, precious metals at the small exchange have moved off of those highs on a daily, weekly, and monthly basis, whereas gold, and this is, good and bad, gold is more or less random at these new highs. And, history is never an indication of the future, but it is nice to see out of the, the 8 new highs this year, and then I think another 5 or 6 new highs in the last couple of years in small precious metals, you do see a little bit of this reversal kind of pushing you towards, numbers like this, Pete, help me to answer the question of, are precious metals expensive, much more than a dozen articles calling for, the end of the world, and that's why gold is cheap.
Right. It's going to 3,000 or it's going to 30. Yeah. You're right. You'll find both those stories. Same way crude's going to 200 or back to zero. I think this is a great encapsulation. We talk about this randomness after a high, and you did some great work analyzing equity index markets last year, and the idea that you don't see what they call the blow off tops and bottoms anymore. Highs you have to be patient around highs to get paid. I mean, this kind of tells you the same story here, that after the highs put in, there's not a lot of necessarily back and forth. We've got a $40 bounce today off yesterday's low. I'm sorry, almost a $50 bounce. And not much back and forth. The smallest precious metals, a little bit different story. And I like that piece of it.
Sure. And I'm glad that you use that word patience, because we're going to get back to it in a second. Because, the numbers here, we try to supply people with as many numbers as possible to answer these questions on their own. And I really do want to, from a strategy standpoint, Pete, when it comes to small precious metals, small stock 75 and small dollar, it is a matter of, doing your own assessment to just arrive at, are they expensive or are they cheap? And that's going to be what dictates the strategy. But we hope to supply people as many numbers as possible to arrive at that answer themselves. And small precious metals, Pete, you talked about patience, usually builds about a percentage point on top of past highs when it hits a new one. And you're seeing almost exactly that today, with small precious metals being a little bit over a percentage point on top of its most recent high. Here, this graph isn't updated to show this market being probably more around here. And that's where that patience piece comes in. So you've got the numbers saying that small precious metals historically has reversed off of these highs. Okay, well then I should just get in there and sell every high in sight, right? Well, no, not necessarily. There needs to be still this strategy around that. And we've talked about it forever, Pete. Patience on this entry. Right. Whenever the worst trades that I've ever had in my life, Pete, are the ones where I get to a screen and I see, oh, this thing looks crazy, and I immediately go in there and buy and sell a bunch of it because I just think that without giving myself a second to breathe.
No, you want to get something on. You felt you missed
exactly. Yes. Yeah, and it's this scenario that with futures, though they do, they move around and they're more capitally efficient than stocks, so they have some zip to them relative to the money you have to put up. Usually, when you see kind of an extreme, and these numbers dictate it for gold in particular, you see an all-time high in gold, and then you see this market on a daily, weekly, and monthly basis not move off of those highs. There's no rush. Usually, right. If you get to your screen and you see a price that you think is perverse, and you are like, wow, I need to get as much on as possible. No, take a second to be like, okay, what happened? Because that market most likely, Pete, is not turning around in the next 30 seconds. Right. But it is nice to see that in the next day, week, and month, there is a little bit of turnaround here. But yeah, keep in mind, tends to put on at least a percentage point. Sometimes I saw numbers as high as 2 or 3% on top of those new highs, telling me that, if the all-time high in small precious metals, Pete, is 64, then it hits 64.01. I don't need to sell that tick. I can sit there and say, okay, this thing might move another percentage point on top. Maybe I'll put my offer at 60 or 64.50 or 64.60, a percentage point higher than that.
And once in a while you'll miss it. And there's nothing wrong in that.
Yeah, absolutely. And so, you see here that letting that trade come to you and patience in general is really what makes for, putting these numbers to use and finally arriving at, okay, I think this thing is expensive. I think this thing is cheap. But that patience piece is going to save you a lot of headache, because, I don't know about you, Pete, but the biggest headaches I've ever had are those scenarios where I rush to get something on because I think that it's going to be gone in the next 30 seconds. And I'm not letting that trade come to me. And you see it with stocks recently, Pete, where, you see these sell-offs and then a slight bounce, and everyone wants to sell that slight bounce, but then it extends through that. And
Absolutely.
metals here at the highs, it's the same thing.
Yeah. And you know what? It's funny, the idea of there's a race, or that if I'm in front of the screen, I'm not doing my job unless I've got something on. And that's something we all learn, that you really have to check yourself against, is that it's not wasted time to watch a market if the opportunity that you're looking for doesn't materialize. And then you move on. You've done your job. You're staying disciplined. You're looking for opportunity. Is it a function that every time you log on, you have to have something on? So, always keep that, because you're right, that it's that over exercising of trying to find opportunity before you've really had the ability to come up with a game plan. Because those rush to trades, like when I used to walk back in the pit and you heard the noise and you saw the bids coming in, and of course immediately your arms go up and you start selling them, and it's like, what am I selling and why am I selling? Well, just because I heard noise or I saw something and was afraid I'd miss it. Those usually inevitably don't turn out really well. And I think you saw it from the market making side when you were doing the same thing.
Yeah, no, I'll never forget showing up because I traded the Asia and Europe, and I showed up one night at like 7 or 8 p.m. and there's usually nothing going on. And something happened with Bank of Japan, and bonds were at new highs. Everything across the treasury curve, new highs. And everyone there is super tense. No one's saying anything at the office because their whole risk portion is full. They've got as much short exposure on as they possibly can. And I had nothing on. And so, of course, I'm like, well, I need to get full of all these shorts. And then it moves through you some more. And it's like, man, why did I rush to this crap? These guys have been short this for hours, and it's been going against them nonstop. But I thought because 7:31 p.m., that's when I need to give as much short action to this as possible. No, patience is essential. And, are precious metals expensive? We'll see in the next coming days of trade.